Hi guys, welcome back to another video. I think the last video I recorded was 2-3 weeks ago. That was the first payout that we got on the FTMO account. Fast forward 2-3 weeks, managed to process this payout, processed it 2 days ago, received it yesterday on the 5th of November. Today's the 6th of November. Okay, so this obviously I'm gonna go into the actual FTMO dashboard and the analytics a little later in the video. So we just close this out. If you want to quickly read this paragraph that I sent out, because this screenshot was taken yesterday, so 14 days ago. It's been a slow few weeks, looking to swing the euro to the downside. Depending on momentum, I'd consider holding to much lower prices. The first region I was looking to target was this point for a 1 to just over a 1 to 2. And then obviously based on momentum, I was happy to hold it a little longer, a little lower for 4%. And fortunately for us, price tapped in, came a little lower, and then obviously we saw some sort of reaction. Whether this reaction leads to something, you know, and takes price all the way to the upside, I don't know. I don't see it happening just yet, but we can go into it in just a second. This was a trade that was actually taken, so entry was at 6.369, so a little lower than what I was expecting or what I wanted to get entered into, but it doesn't really matter. Again, we have that stop loss buffer there for scenarios like this, and then take profit was exactly at 4747, which is right there, basically right there. So clear this out. Now I want to keep this video as quick, easy, brief, and as simple as possible without going into too much. Again, for a more in-depth understanding of at least this portion of this market, just go back to the previous video. Broke everything down from step 1 to the end, right? Just clear some of this out, remove drawings, and just minimize my face. All right, so where do we start? Again, we're just following on from previous video. The previous video. We were overall bullish in this market, bullish in this market, and as price took at this point, again, this is just based on. This is why for me backtesting is quite difficult, because I'm taking into account each individual day's context and the different factors, and there's so many different factors that allow me to take buy positions or take sell positions on that day, or even stay out. And these could be factors that you can't see until you can't really see or break it down after the fact. And an example of that would be, if I'm not mistaken, as an example, I think it was this week candle. When this week candle opened, we started off with a wick to the upside with no downside movement whatsoever. So I knew instantly, okay, we've not traded out, although I'm bearish overall anyways. Not bearish, sorry. I want to potentially pay short-term sells based on the fact that price has taken out a high that's been resting here for a very, very long time. So you're talking about upwards of 70, so about 3 months, right? 3 months, 2 months, just over 2.5 months, I'd say. So I knew that from this point, we could potentially see some sort of selling interest. Now, not for an overall bearish market, just the simple fact that we can see a pullback. Now, one thing I do tend to mention is I'll never be the first one to get involved in short positions as price takes out these points, because I'm never always looking for that pullback as per se. When the pullback is given to us, I'm fortunate enough to receive that pullback for me to then get involved. But I'll never force that pullback. I will never trade that pullback unless context and there's factors in place that allow me to actually take it. Other than that, I'm waiting. Can price offer me a better price? When it does offer me a better price, then I can get involved. And I'll show you examples of this, even based on this trade that we took. So yeah, overall the market's bullish. From, let's just say, this point. Again, the main number one thing that we speak about, that I talk about, is understanding the different variations of the same price action on different time frames. Where on one time frame we might see a multiple highs and lows and a break, where a lot of people are going bearish, which is not wrong to go bearish, but they're missing out a key factor. One that we follow is we have a bullish narrative, we have a backup bullish narrative, and then we have our standard bearish narrative. Reason being is because how many times have you seen a strong break, expecting this high to hold, and then we see price make its way to the upside? Now, we understand that whenever we take a trade, there's factors in place that could negatively affect our trade, which is fine. Hence why with this stop losses, I'm not saying that we're never going to take stop losses. So my strike rate is 50%. Over the last month, my strike rate has been 50%. So I've only taken 4 trades, so 2 losses, 2 wins. So there's always going to be losses that happen, right? But it's just the understanding. I'm not talking about deep understanding and the mechanicals of the market and how the market moves and the reason. I'm not talking about any of that. It's just the bare minimum that we need to know. So the reason being is the last thing I want is to get stopped out, because I know that whenever I take a trade, there's factors in place that are always against me. It's just the reasons why I'm taking the trade is stronger than the ones opposing it, right? But I will also want to know what is opposing this trade idea, just so when it happens, and if I do take that stop loss, I already accepted the fact that price can and has all the more reason to hit my stop loss. So I'm not confused. Taking a stop loss, okay, I kind of knew that this was a possibility. It's happened, and I can stay down, I can lay down. It's not like, oh, what's happening? Because that's what happens when you're scalp trading. Firstly, because emotions are always running high, because you're in and out of trades. You know, you could take upwards of 10 trades in a session. With me, I'm taking 4 trades within a month, 1 trade every single week on average, based on the last 4 trades, right? So, idea is, look, price break structure, and we've already spoken about this, so just go over it one more time. If you want a deep understanding, just go watch either the previous video, which I did a really good breakdown, or any video before any of the backtesting. I'll show you live in price. Backtesting is a bit, I don't like doing backtesting, but here's where it is. We've seen the break of structure. Because I knew that the overall market has and is technically so bullish, because again, going to the second point, what does this variation look like on a different time frame? I want to look for reasons why the market can go bullish again. And if it goes bearish and I take the stop loss, I can at least say to myself, I was following the overall direction and I got stopped out. More than happy, because I'm following the overall direction. This case is, yes, we will take the short position, and I've showed examples of in the previous video where we did take short-term shorts instantly without further confirmation and stuff, right? So this idea, price break structure, why price go bullish? What does this price action look like on a high time frame? We're not talking about specific time frames. I'm not a specific time frame trader. I'm a price trader. I'm a price action trader. I'm trying to intertwine, link up all the time frames together, and just follow the entire market, not one time frame bearish, one time frame bullish. Hence why the understanding of the different variations of the same price action on different time frames, whereby if today it looks clearer on the hourly time frame, if today it looks clearer on the weekly time frame, I can take on whichever time frame, because I'm still looking at the same thing. It's just it comes in different formats. In this case, what would it look like? And I'll show you a perfect example within here, right? Which I've already done in the previous video, so probably not. When we see a break of structure, a clear as day break of structure, why does this happen? What is this price action on a different time frame? Well, it could have been a case where we see weekly bullish candles, and this price action here could have been previous this current week's opening coming below, maybe even just filling in this imbalance. That's the easiest example, right? Filling this imbalance, making switch to the upside. So on the weekly time frame, you completely see this as a bullish market. If anything, you're waiting for this to happen on the weekly time frame. So whereas on the daily time frame, forward time, whatever relatively lower time frame, you see break structure and you're so aggressively bearish. And again, I'm not saying that you can't play short-term shorts. If it makes sense, go for it. Understanding that they're high risk positions. If you have the mental capacity to take the stop loss on a position that has very low probabilities, then fair enough. There's times and places where my mental state is in a very good state. I'm quite fluid with the market, where I can take higher risk positions, which I did in this 2-week cycle before this payout. But I have that mental, I have that mental in place for me to accept the loss. And sometimes my head's all over the place where a loss may screw with me. I might just wait for better market conditions, or might just wait for the high probable setup, right? Anyways, just before I stop rambling on, variation of this on a low time looks like this, high time looks like this. It comes in so many different forms. It could also even be protecting previous days or weeks low points and just seeing clear bullishness, and these wicks are down to because we know more than likely if a week's gonna go bearish like it did this week, we might see a wick up first. Well, we are gonna see a wick up first. How big the wick's gonna come, we don't know. Hence why it's so important. And this one thing I always mention, I'm not after the pinpoint accurate entry where price taps and goes. I'm looking for a mean average. I'm looking for a decent entry where I can get a decent stop loss, and then again a bare minimum of a 1 to 2 range for take profit, and then anything more is just a massive bonus for myself. Just a second. Yeah, so we just clear this. So then the idea comes when we see, look at something like this, right? If I go back, if I could I use replay in the weekly time frame right here. Perfect. Look at this. So if you're a weekly trader, right, you might see this bearish, and again, you would hardly see me marking at supply demand points. I do trade a concept from supply and demand, but I'm not like a 100% supply and demand trader. There's a lot more discretion, also a lot more logic behind it than just putting a few boxes and a few lines and then expecting price to just react out of these lines. What do we see? We see a bearish before a bullish candle. This is a point of demand, right? Don't really see. Again, I don't use boxes, so I don't have any templates saved. So you see something like that, you want to see bullishness. We know fast forward the bullishness didn't work, but again, the first idea is, look, we're overall bullish and we want to play bullishness as much as possible. Yes, there's short-term sales that we can take within there with the overall bullish buys, that if and when the bullish buys or the bullish confirmations get given, we can take the buys to the upside. That's what we're looking at. But then again, this is a clear bullish market, right? Clear bullish market. You can just see it heading to the upside. You'd have no reason to actually short this market. Second, you go to the daily time frame. Let's just say a daily time frame trader or someone that doesn't check the week time frame, only checks the daily time frame, or only checks the forward time frame, that doesn't understand the different variations of the same price action. What would they be seeing? They must have seen some sort of breaker structure within here, but let's just say on a daily time frame, you've seen a strong breaker structure within here, or you've seen a breaker structure. You've also then seen highs and highs. You'd be 100% bearish on this market. That's what happens. You forget about what's actually happening on the high time frame, because you're so, again, it's not that you're stuck on the lower time frame, because again, without me having to go into the week time frame, I've already understood that, look, when fractal strategy gets broken, I understand that I want to start looking for buys. Not even looking for buys. I want to have the idea that buys can come into this market just based on logic. In this case, would be this price point is cheaper than previous buying price points. Could we see some sort of buying interest enter this market, take us to the upside for structure to support it? Then we know that on a relatively high time frame, this would just be a push up, push down, pullback, continuation. Simple as that. Anyways, like we explained in the last video, we were quite neutral and we had confirmation to take shorts. We took the short positions and the short positions worked out in our favor, right? Price comes lower. Now people, they follow another system, a mechanical system as they call it, which is we see one break, two break. Once we see the second break, we're 100% bearish. How many times? Again, how many times have we seen breaker structure, further breaker structure, and the price makes its way to the upside? Again, remember, for us, when we see the second breaker structure, we assume it to be a complex pullback within a larger ATB range. We know that this variation could just be weekly wicks coming below. And we know every time price breaches low points, we could go in with the assumption that this could just be price digging into deeper discount pricing before pushing up higher, all within a larger again always all within a larger ATB range. But then it gets to a point where if bearishness looks a lot stronger, and you have context, because we also have context for the buy side and the sell side, right? In this case, the sales just looked a lot more promising and we got involved in the sell positions. Now, few other concepts, nothing too serious, nothing too major. It's just, if we're going to play short positions, where are we going to target? We can target the immediate low. If we want to target anything below that point, do we just put on a random line on the chart and just target it? No. We go in with a bit of reasoning, nothing significant. If anything, I'd call it insignificant points, but they're just reference points, just something to build a narrative upon or around, right? So we know that the reason we take or may look for buys and close out sell positions beneath this low is because this low is cheaper than this price point. We could see some sort of buying interest. Same theory follows for every single low point or every single high point, right? So same thing here. Whether it comes out or not, we know that we may just see a reaction. So it could be a partial point. It could be a closing out your entire position. The same theory is we have all of these lows in the market. Again, nothing significant. So even if you didn't want to mark it, you don't have to mark it out, because the main and most important thing would be taking out this low, which is fine, right? We can say if we want to target anything below this point, somewhere a little near to this point still, we have one of these lows resting here, insignificant point, use it as a reference point, build something upon it. It's literally as simple as, I hope price comes lower, and if it does come lower, do I have any reasons for it to come lower, and to what price point? I got this price point here, let's just target it, let's just see if it comes in. Literally as simple as that. There's nothing too serious about it, hence I'm not going to go into it too much. So that was what we were looking at. I'm going to get out of replay mode. 4-hour time frame. And we had the last, so we had this point that we were just talking about, but then I marked out this point. I was like, look, let's just see if price can come any lower than that. And that's the point that we marked out, right? So I'm just going to mark that out, just keep it here. Now, I did take a sell position. So over the last 2 payouts, the first 2-week cycle, 1 losing position, 1 winning position, 1% loss, 2% win, so I was up 1%. The next cycle was 1 loss, 1 win, 1% loss. What's going on? Shit, I've lost the internet. Never mind. Let me just connect to, I don't know what's happening. That's fine. So the second cycle for this payout was 1.5% loss, 4%, and then we were up 2.5% after profits paid 2%. It was a payout that we received. I'll go into why. Again, the only reason this is a 1.5% loss as opposed to a 1% loss was simply because I mismanaged my stop loss, or at least my lot sizing, where I was looking for a certain lot size. Well, I had a lot size already in place. Entered the trade, forgot to lower the lot size because I was increasing my stop loss. Hence why I took the stop loss here. High risk position, I'm not going to go into it just because there's literally no point. Based on the fact that it was a high risk position, it's not a position that I take every single day. It's just I had hopes in it. I knew it was a high risk position, and I had the mental. I have a breakdown. I might add it in if I edit this video, which I don't think I will. But the breakdown was just showing that I wouldn't even recommend taking this position, even for myself on a normal day. I just had the mental, what's the word? I'm missing the word. Again, there's one thing which is preserving capital, then there's preserving your mental capacity or mental capital or whatever, right? And I was okay to take that hit on my mental, and knowing that's not going to affect me too much. And again, that's purely just based on feeling, not the trade itself, but just accepting myself taking a lower, very low probable position. Anyways, going into it, so overall bearish, just based on what we're seeing here. And again, if this was to happen and price was to make its way to the upside, fair enough. But what we end up seeing is, we're seeing these massive ranges, we're seeing all of these microstructure. So we know when price takes out this first point of structure, we know that selling interest can come in. That's where the narrative for the shorts that I took the loss on the first time came in from. But again, price has all of this range to come back into. So technically the safest stop loss placement would be this high. And again, I wouldn't be able to get my stop loss at them highs. So then it's about just, okay, as price comes in, as price starts to move down lower, can we then find some sort of entry? What ends up happening, price comes all the way into the extreme of this point, taking out major fractal points, and we see that continuation to the downside. When I see that, it's then a case of, look, like all this is, you can take an entry here, but where's your stop loss going to be? In this case, I've had to ask myself, all of these micro highs. Let's just see, let's pick up one point that was within session. So this one was within session, so this candle was within session 130, and the next point was within session. So we'll go for this one, so we just see price respecting this point. So it's a case of, look, I've entered in 30 pip default stop loss. Is it really giving me much protection? Not necessarily. Based on this week, this was Friday, printed these highs, so coming into Monday, right? Idea is, coming into Monday, do we see high prices, which could still protect previous week's high, because this is now previous week's high, before seeing a continuation. So again, one thing I can do, which is okay to do, bare minimum is 30 pips. I don't mind giving myself a bit of a buffer by 10, 15, 20 pips. So let's just say in this case, we wanted to use a 40 pip stop loss, even though it's not in the safest position. So what I say to myself is, for that reason, yes, I can enter. It's not the highest risk position because we're seeing a reaction out of this point, where during session open, we have a decent stop loss. Could we then see a follow through? And in this case, it would have worked out, and it would have been a trade, and it could have been a trade that I was, we could have taken. But because I took that previous loss, I was like, okay, let me just wait for a little more. Let's see. Let the market prove it to me. Because at the same time, what we've seen here, we've seen micro lows. Could price have reacted out of here, made this way to the high upside. That's the thing. If I've then taken a stop loss, seeing that price react out of this micro supply point, knowing that at any moment price can end up turning bullish, we're just taking the shorts based on the fact that we're seeing current bearish momentum, but also understanding that bullishness can come in at any point, because again, high time frame is overall bullish, right? I would hate myself if I was to take a short position right out of a demand point, right? So I said to myself, okay, let me just wait for a little more. Again, waiting has never hurt my pockets. Waiting has never hurt anyone's pockets, in the sense where, again, you might not make, if I took this trade, it would have been up a further 2%, but at least I didn't take a stop loss. At least this, again, if this results in a stop loss, I can say at least I didn't take a stop loss. At least I'm not 1% down. I waited, and we saw that push to the downside. So then coming in Wednesday, Thursday, Friday. So why is it? This is Monday, Tuesday, Wednesday, Thursday, Friday. Okay, yeah. So that's the okay, we got this range. We see the first break. A lot of people start buying this market, and here's a possibility. Again, how many times do you see price do that and make its way to the downside? I'll show you the perfect example on GBP/USD of that happening, right? But again, bullishness works out. Me knowing that this is a high risk for me to get involved in the bullish side, based on the fact that I'm overall bearish in this market. Now, this could have flown to the upside, and if I had that bullishness in mind, this wouldn't have then been a low probable setup. It's just because I'm overall bearish. That's what makes it a low probable setup. Yes, okay. Selling interest can start to be shown within here. But do I want to take a short here? Where's my range? My bare minimum range is to these lows. My take profit would have to be at these lows. Where's my stop loss going to be? I'd want my stop loss as high as this point. I know I'm probably not going to get to these highs. Even if I want to take this trade like this, let's just say, for example, my stop loss would have to be, let's just say, 40 to 50 pips. Even with a 50 stop, I would have got stopped down. And what's my range going to be? 1.5. I ain't taking that. So that's when I say to myself, as much as I can take an entry here, from a risk reward perspective, does it make sense? No. So I'm going to have to wait for a better entry. Because now look what's happened. We've seen that bearish intent. We've seen the pullback. We've seen further bearish intent. I don't need any more confirmations for me to, I don't need to go to the 1 minute time frame, see a break, and then go into the 15-second and see a break. Yeah, I don't need to do that because I've seen the confirmation. The confirmation is given to me. All I'm looking for now is the best or the most preferred place to enter from. For me, it was, so we have high to low breaks. We have this supply point right here. Perfect. There was then an imbalance point, daily imbalance point somewhere around here. Looking for that to get filled. As that gets filled, we get tapped in. So it's okay. And this is all around the 50% region of this entire range. So I'm like, okay, I don't want to take an entry here, but I'm happy to take an entry here and anywhere above that. But this is my bare minimum point that I'm willing to take an entry. So this is what we did. We slapped it on. My entry was, I can't remember exactly where it was. And I entered with a 40 pips stop loss. Again, bare minimum 30 pips. Or 40 pips. I was happy to do so. Why? Because again, I'm looking for any reason to maybe give myself a little bit of a buffer, And in this case, what I said to myself, this is previous weeks, or if I go into different time frames, this may have been that current week's high point. And the idea was, could we literally just protect current week's high point, assuming that we're aggressively bearish, we're seeing a pullback, do we protect current week's high point, and then see that further continuation? That's exactly what happened. So we had a solid entry, which gives a decent stop loss placement. Again, preferably would want to hear, but based on different factors, I was happy to take it there. If I got stopped out, price came higher, it's just probabilities were in my favor. We could potentially enter on a later date. We suffered drawdown for 5 days before price made its way to the downside. 1 second. Okay. And then it was a case of, okay, that's my take profit. This is the next region that I can target. Then I was like, okay, we've seen quite a decent momentum. Keep it simple, kind of. It was literally as simple as this. Again, it's not following a. Once it takes at this point, it's more now, because this is based on data, based on system that price is going to take at this point, based on hope would be, can price give us anything lower than this point? So we try squeezing. Eventually we hit our 4%. I was like, look, I'm out of this trade. Done. That's that's the breakdown for this trade. It's very simple. There's not much to it. I probably spent more time breaking down previous price action and previously what happened than the actual trade, because again, the trade itself, once you have the context in place and you have the direction in mind, the entry is the easiest bit. Literally, the entry is the easiest bit. There's not much that we're actually looking for. Okay, so like I said, I want to show you an example on GBP/USD. Let me just show you first. I was on TikTok live and I just saw someone post this, right? What did they see? And what do majority of people see? They see a break of structure, they mark at the demand point. They're saying if they see a break of structure above these high points, they're going to wait for a pullback, then a continuation. Instantly, I screenshot this, goes like, this would be a really good example to put on YouTube. If we go to GBP/USD, so exactly what we're looking at. This is exactly what we're looking at, right? They're looking for a break of structure. This was the break. That demand point marked out. If price is at this point, what we're looking for, demand point to get tapped into. What happens? Price rinses through that, and we carry on falling. You know, upwards of 400 pips, right? Again, what's actually going on? If you clear some of this, right? Based on, again, not even going to talk about the bullish on the bearish side. We're just focusing on the bearish side, because again, once you have the bearishness in mind, there's always bullishness and bearishness that you can look at. Bullish narratives and bearish narratives. But once you have your context in place and your different factors in place to say to yourself, I want to take short positions, you then start to neglect the bullish side and you start to realize, okay, what we're seeing on the bullish side is nothing but a X, Y, and Z, right? And we'll show you. So based on this being a bearish market, we see a break. So based on, again, this is not me specifically going to the daily time or the weekly time frame. Again, it's just understanding the different variations. If I'm on the forward time, I can read the same thing. I know that we've seen high points that print to this low point, gets taken out. The first thing I'm always saying is when we see a break of structure, the first thing I'm assuming is there's a larger range in play. Is price giving us a pullback? Where the pullback's going to come into, I don't know. Simple thing is, you can either play a risk entry, maybe a stopped out, then wait for that confirmation. Or if you just want to wait for that tap in confirmation and they're at a low point, again, it never hurts you to be the last one to get involved, for as long as you can squeeze a little bit out of this market, right? Again, this is the perfect example, because this break of structure and this demand point, again, it's not just me making it, but I've seen it on TikTok Live, I've seen people do it, and I was the same exact trader, and I kept asking myself, why am I seeing a break of structure and then that narrative failing on me? Your understanding is, what does this variation look like on a relatively high time frame? So if we mark this out, just clear this. If we mark this out, what does that look like on a weekly time frame? So what week are we looking at? Looking at, start new one, 1 second. GBP/USD. I go to the week time frame. Okay, so that's what we're seeing, right? So on the weekly time frame, it's price printing up lower, printing up higher into this supply point. Other ways you can read it: price coming up higher, printing high points of the week, protecting previous week's high points, and then we see that continuation. Go to the daily time frame. It's nothing but a larger bearish range in play, a pullback back into the high points of this range, and then we see that continuation. Do you see how then we can, again, if you're bullish on this market, let's just say for argument's sake, there's something within here and the overall context is bullish, then you can use this as a reason to go long. I'm not saying that the long position is wrong. I'm just saying a lot of people would see a break structure, they see a demand point, buy, a break structure, supply point, sell. With nothing more than that. No logic, no nothing involved. So that's basically, that was just a very easy example, just something I just want to show you guys. Break structure, larger ATB in play. The variation of that on a high time frame would just be a weekly printing up higher before that bearish candle comes in. Even if it does close as a bullish candle, we've printed high points, assuming that next week or the week after we might see that bearishness come in. We just protect previous weeks or whatever. Or it could have even been a case where this week came in and filled in some sort of imbalance. Same thing. Again, it's just understanding context. And then you might argue, so then what was this break structure here? Again, understand you have a larger ATB range. This first thing we assume is overall market, because we're bearish on this market, assuming that you're going into this market with a bearish perspective and you're in a bearish perspective, assuming this to be a form of a pullback. Again, a pullback doesn't necessarily have to come into 50%, doesn't have to come into the extreme. So does it mean we might even get an entry here? We might not. Again, just literally just depends. What does it look on a daily time frame? Taking a previous day size, it could be price tapping into some sort of imbalance. It could be price X, Y, and Z. Because if you look at this on the daily time frame, what is this? A larger push down, pullback, and then a continuation. You cannot tell me that based on this little break of a wick, it switches this whole market from the bearish side to the bullish side. It doesn't work. It's just using logic, right? Yeah, so that was a good example. US30 isn't a trade that I took because I think it was during this point I was waiting for, because I was waiting for EURUSD to potentially tap in. Looking at the same thing, what do we see? Lows, 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 break. So a lot of people may be bearish in this market. Why does market go bullish? It could have gone bearish. That's the thing. It could have gone bearish. But basing it off the fact that we're overall bullish on this market, we'd assume that prices come in. This is lower than previous buy points. Could we then see some sort of bullish interest and see a bullish market take place? If we got stopped out, fair enough, price comes lower, just offers us a better pricing. Would we then want to get involved straight off the bat? Maybe not. Maybe intentions can change, because I'll show you another example. Break of structure. Whether you took buys here or buys here during session, whenever our session or your session starts, again, these are valid losses because overall the market is bullish and you're playing buys beneath previous buy points, buys beneath previous buy points. What ends up happening? Supply holds, and we see that break structure, because again, remember, it can happen sometimes, but are we going to be the first one to get involved in sell positions? Not necessarily. Now, just because price is broken doesn't necessarily mean we're overall bearish now. It just means we may be seeing a higher time from comments pullback. So do you want to play this short? I may not want to play this short. I may just wait it out, right? But I know that if buys came into the market, I understand why. But again, like I always say, if I've taken the first loss, if I've taken the second loss, or if I've taken the first loss and we're seeing continuous breaks, I may hold out. I may just wait for that intent to come in, price to hold this market, and then get involved. I might be the last one to get involved. If I can squeeze a little bit from this market, I'll be more than happy, more than content, right? Again, what do we see here? Larger ATB range. Let's just assume that you look at it from the bearish market, because now you've seen price break once. We're still holding the supply. Are we just seeing a larger ATB range, pullback, continuation? Larger ATB range, pullback, selling interest above previous selling regions within 50% of this bearish range. Could there have been an entry within here? Possibly. And then from here, we end up seeing just a simple, easy continuation. So again, there's going to be times where the market works in your favor beautifully. And when you catch these, you're catching, your 1 to 5s, your 1 to 3s, your 1 to 4s, right? And then you may take a stop loss, you may take a valid stop loss, another stop loss. And then you get in line with the market once again. Or you might just wait out. Eventually, price takes out these lows. Again, every time price comes lower, we're setting up potential opportunities for the market to begin its run to the upside. Do I know when this is going to happen? No. But what I do know, as price comes lower and lower, we have more and more buyers that are looking to get interested. I'm a buyer, but it's not just me. You're talking about institutions, right? Because what happens, price comes lower, we're coming deeper and deeper into a larger A to B range. We're now in and around the 50% region, or we're going to come into the 50% region. So if you want to place short positions into the 50% region as an insignificant reference point and just target into, you can do that. But again, this price always had to come into 50% zone. No. So I do take short positions. I need to have a good enough context in place, because I know that buys can come out of this point. Based on what we're seeing here, do we see a small pullback get involved? Could we then get involved? Maybe a possible opportunity, maybe a trade that might be taken tomorrow, right? And yeah, that sums up the narrative. The thing is, because it is the start of the month started a few days ago, I just want to see what's going to happen here. Have we printed potential low points of the week, of the month, and then we see a solid continuation? That's possible. Why? Because look at it, it's such a simple market. When you break it down specifically with logic, it's such a simple market. What we seeing? High get taken out, major low point, major high point. That's the bullish range. Price come lower, buys could have happened. Price comes lower once again, setting up for potential buys to get into this market. Are we going to be the first ones to get involved? No. See how the logic just makes sense. The more and more you look at it, the more and more you break it down. Because sometimes all the high time frame is the same data, just scrunched up. Sometimes it's easier to read it with less data. Sometimes it's a lot easier to read it with more data. In this case, it's probably easier to read it with less data. Price pulls back once, comes lower, potential opportunity comes lower, potential opportunity. Doesn't mean we're buying. We don't do that. Context and different factors in place will allow us to get involved and stay out of certain positions. Price comes lower, all within a larger age range. Here's the thing, even if price is at this point, what do we know? We have a larger A to B range. But the good thing about that is, as much as we can go bearish, we have reasons to short this market. And if this market completely flops to the downside, we'll have a narrative for that. Just no need to get into that. I don't really give a shit what's going to happen in 6 months down the line. Focusing on week to week and potentially this monthly expansion, or any current monthly candles expansion. So that's what we're looking at. Just waiting to see how this sets up. So for me, I'm not interested in anything right now. It might be a week worth of waiting, and then we see what happens. Yeah. One more thing, we'll go over the analytics. New window. Just gonna open up on my laptop. Just waiting for it to load up. There we go. So what do we see here? This was for this account, so we extracted 2.5%. Reward was processed yesterday. Reward date was on the 5th. We processed it on the, I think we processed on, yeah, processed on the 4th, and we got a payout yesterday on the 5th of the next day. Let's just go over some of the stuff again. Don't mind this. Can't really judge consistency based on 2 trades during this cycle. We took 2 trades. First on the 17th of October, 1.5% loss, and we closed out this trade on the 4th of November with a 4% gain, 50% win rate, of course. 2 trades, 1 loss, 1 win. Average reward would technically be 4%. It's just I messed up on the lot size on this trade. Again, still a decently contained loss. And yeah, November so far up 4%. October, but again, this is skewed because every time you get payout, you get a fresh account, so it's not tracking the data from your previous trades and whatnot. But yeah, again, there's nothing much to it. Apart from like duration, maybe durations of each trade. Let's see. Duration was not That makes sense. Held this for like 12 days or something. Doesn't really show what I'm looking for. However, we can just work out here. We entered the trade on the Friday. We closed out on the Tuesday. 11 days. Held it for 11 days. And here's the thing. My system's built. The reason why I'm okay with this system is because I used to get slapped left, right, center being a scalper. Even being a day trader. In and out in the same day. In and out in the maximum of 2 days. I just realized that, again, I think one lesson I had to learn, and one lesson that every trader has to learn themselves, instead of being taught it. Everyone says control your emotions, control your risk, don't overtrade. But then the question is always, how can I stop overtrading? For me, it was a case of, it got to a point after 4 years. I'm like, I'm making the same mistakes. Every time I overtrade, downhill. Only way I'm gonna stop it is if I stop myself. And it's just one of the things. It just gets to a point where you just say to yourself, "Fuck it, I need to fix up. And if I don't fix up, I'm gonna be in the same cycle for the rest of my life." And I was in that cycle for 3-4 years. Only recently I realized, not recently, but only over the last solid few months. I want to say few months, but the last year, 6 months to a year, I realized that I'm happy to just wait. Because again, I think one thing as traders as well, you forget the value of each percent. Me making 2%, seeing that in my bank account, again, how much can you do with 2%? You can do a lot. It could be close to your monthly salary. Combine that with a secondary job or a part-time job or something, you're making a solid income. All you had to do was take this trade as an example. It sounds easy, but all you have to do is take a trade, wait 2 full weeks, and now you've extracted up to a monthly or close to a monthly salary. I take that any day. So yeah, that's the breakdown. I'll probably ramble on quite a bit. But yeah, I'll post another video if and when we get another payout. And yeah, see you guys in a bit.